The first 9 months were incredible. In fact, we advised on over $1 trillion worth of deals for the first 9 months. No one has ever gotten to that level. So absolutely volume. The number of deals are actually not up that much this year, the actual number of deals. It's just larger deals have been done. As far as the market goes, historically, M&A has kind of tracked the market. If the market's up, M&A is up. It's just been an historic trend. And look, the market is up for lots of reasons, including trade wars. With NAFTA, it looks more like we're not going to have huge trade issues. It's more part of a negotiation. We don't know. But I think that's part of what's driving the market. So what does it mean to M&A? Look, I actually think that we are going to have a continued pace of M&A, certainly for the next 3 to 6 months.
Conversations picked up?
Oh, they definitely have picked up.
They have?
They've definitely picked up in the last couple of months.
From August, for example, yeah.
Well, and because, look, there's a realization by CEOs and boards that a lot of the things that have been done driving stock price aren't repeatable. So, for example, if you look at the S&P increase the last few years, driven a lot by margin improvement. Right, a lot by margin improvement. If you also look at the tax law change, right, that's a one-time thing.
Yep.
And as you and I talked about, the last time I was here, the repatriation had nothing to do with M&A. It was predictable it would go into buybacks. But boards look at what's going on in the world and they realize, what are we really going to do to get growth?
It's the same story that you and I have been talking now about for, well, very, very long time.
And it's even more so now.
But knowing that story as well as I do and you practicing it for so long, when a market starts going down, it introduces price differentials that make it more difficult to get a deal done. And when rates go up, that also can be an impact, can it?
Well, where it won't have an impact, if rates go up, it's not going to really affect what people can pay. Right. Private equity. It doesn't really affect
private
returns.
Equity has not been a huge part of the M&A landscape over the last few years. It's been much more driven by strategics.
Yeah.
But if you're a CEO and you're watching your stock go down, you're not as likely to do a deal, right? So
I think so.
If this were to continue, for example,
absolutely.
Today's little hiccup.
Right. Well, obviously the year has been great. Sure, in a declining stock price, people are going to get concerned about doing deals. No question about it.
Well, regulation's another break here, and this one has been more serious this year because it's been kind of hard to figure out the policy coming out of Washington when it comes to antitrust. And then we've got China and questions there about continued approvals. Is it a concern in the boardroom?
Oh, it's a huge concern. I mean, what's happened in the last year, where even more than in the past, there's been political underpinnings of getting approvals, is absolutely challenging. So what happened in the whole Qualcomm and XP transaction, where the Chinese blocked it, pretty much predictably because of the...
They actually never approved it. They didn't actually block it.
True.
They just ran the clock out.
They let it go. They let it go. That has real implications. So people are nervous about doing deals in the U.S. that have any Chinese involvement. This happened before, obviously, with CNUC, but it's even more serious now. Regulatory environment, very unpredictable.
All right, so is United Technologies going to get approval for Collins? Is Disney going to get approval for Fox in China? Those are two key deals. What do you think?
Look, you would think so. You would think that one was on the heels of another. There's obviously no antitrust or national security risk really in any of those deals. And of course, you saw that Rockwell was approved in the U.S. and Cigna got approved in the U.S. So there's rationality as far as things getting approved, but there's overall unpredictability, which came from that whole blocking of the Broadcom deal.
But that unpredictability, at least at this point, is not stopping people from having conversations about doing some big things, including cross-border?
I think the unpredictability may actually cause people to try things that were viewed as more difficult in the past. T-Mobile Sprint, obviously, no one would have tried that in the prior administration.
Well, they did, and it failed.
But they never even got anywhere in it. It's not even, they didn't even get to a signed deal.
No,
right.
That's true.
Here, I think the view is that in this administration, it is less predictable, maybe more commercially focused, and we don't know. So people may be trying things they may have not tried before.
All right, that sounds hopeful for some interesting stuff. Activism continues to play an important role, at least in potentially bringing deals. Campbell's the latest one. Now, Dan Loeb not necessarily saying you got to sell the company, but many think if, in fact, he wins, that will result in a sale down the road. Does it continue to sort of fuel in your mind as well activity?
Well, it absolutely fuels activity. Whether it actually results in anything happening, it's a different question. So you have Campbell Soup, you have Nielsen, so yes, they're definitely shaking things up. And of course, Campbell's already has said they're going to sell certain assets. Nielsen actually announced they're exploring strategic alternatives, which is somewhat of an unusual thing to do. Whatever the strategy was, it was. So clearly shaking things up. Does anything actually happen at those companies? We'll see. The problem for activists in the U.S. is that a lot of the low-hanging fruit is gone, right? It's actually more. There's more to be done in Europe, where there's still conglomerates and all that, and also, you know, event investing, very, very hard thing to do. And take Nextel, for example. They go in there, get the price up, and the Elliott, again, very smart.
NXPI, you're talking about.
NXPI, yeah, exactly. NXPI, they get the price up. And by the way, they come out with a presentation from an investment banker that the stock on a standalone basis is worth over 135.
Right.
Deal doesn't happen, stock's trading at 84.
Yeah,
right.
That's pretty ugly.
So it's pretty ugly. So it's tough to bet when you have all these regulatory and other uncertainties.
Although, despite the fact that you speak critically of activists, you'd be nowhere without them. Imagine your fee base without those activists.
Oh,
Come on. Every day you have to be thankful.
I have never spoken critically. I think that they are a very important part of our economy. Now, look, I actually have said before that activism on balance is absolutely a good thing. It's caused boards to focus on doing the right. We're not creating any more Fortune brands, right? We're not creating any more GEs. We're not creating any more conglomerates. That's all good. The issue is that sometimes they take positions like at NXP that are kind of ridiculous, but you know, you take it for what it is.
All right.
You know?
Fourth quarter forecast, though, is good. That's what I'm hearing from you.
I think volumes are going to be better than people expect. It's obviously going to be a record year because we're already on record pace. But yes, I think it's going to be good.